Okay, Dad, today I'd like to talk to you about the US economy. This is a tricky one. I'm getting a lot of conflicting information about it. On one hand, I hear how strong the US economy is, that we have this robust labor market, consumer purchasing and confidence is high. But also at the same time, we have huge budget deficits. We're approaching $35 trillion in national debt. Uh, I saw that we are adding $1 trillion to our debt every 100 days. Is that correct?
Um, that could be correct. I mean, I was looking at the increases over the last several years, um, and they've been over 2 trillion for the last several years, and maybe it seems to be an accelerating trend. We may very well be at you know
Right,
three
and
trillion per
I
year.
think February of this year was a record high budget deficit. We are spending more than
Right?
two times what we are taking in tax receipts. So it's confusing. People are
Yeah,
saying like, look, this booming economy, look how the labor market's so strong, and people are still spending, but at the
yeah.
same time we're running these huge deficits. So help me make sense of it. What's going on? Do we
Well,
have a strong economy, or are we looking at a recession?
yeah. Well, it's hard to make sense of. It's just not like anything that I'm used to. When I grew up, when I was growing up in the 70s, and then later in the 80s, it seemed like the economy followed quite a regular pattern. I mean, there were booms and busts. There were periods of growth, there were recessions, and typically during those periods of growth, government avoided deficits, and actually there were budget surpluses back in those days.
Mm,
The government prepared for a rainy day the way that individual savers are supposed to. And then yeah, the recession would come, um, and there would be a period of deficit spending, and then we come out of it, and that would end, and we'd go
mm.
back into a balanced budget. So the thing that really strikes me is just, yeah, we're not in a recession yet. We have these tremendous deficits, and what's going to happen when we go into a deficit, into a recession? Because
That's when you're supposed to spend.
yeah, well, typically that's when you're supposed to spend, and that's what our government still does. It increases spending. It did so massively, like during the COVID pandemic,
Mm.
and yeah, but you're supposed to be doing that from a position of let's say, a healthy budget, and we don't have a healthy budget now. We're already at very high deficits. So what kind of deficits are we going to have when we go into a recession? The government spends more, and then receipts also drop. That's
Mm.
because of course people are making less money in a recession, and tax revenues therefore decrease.
It's a double whammy.
Yeah, so we're already at this level. It seems like we're kind of racing towards a cliff, and it's hard to imagine that this is, you know, maybe there's something that I'm not seeing about this, but this just does not look good. This seems to be a very uh, worrying situation. This is
Right? Do we have this idea that national debt and deficits don't really matter? And is there any truth to that? Because there's modern monetary theory
right,
started becoming popularized, I think, to justify the amount of
right.
spending. Is there any real truth behind it? Because if we look at, okay, just take the COVID spending, for example, we spent $5.7 trillion in COVID relief packages over a
Right.
span of 3 years. And when I started college in 2007, the national debt was $9 trillion. So we spent $5.7 trillion in the span of 2 years.
Right.
And now that our national debt is at 35 trillion.
Right.
And, everything seems to be going along fine. Or is it?
Yeah. Well, um, yeah, again, I remember people worrying about the national debt. I mean, the economists, politicians, expressing concern about the national debt back in the 1980s. You look back then, whether you look at it in absolute terms or in, inflation adjusted terms or as a percent of GDP, it was a much smaller problem back then. And the problem has gotten worse, much worse. After a kind of a brief spell of fiscal rectitude during the 1990s, where actually some surplus, balanced budgets were achieved. I believe at the very end of the 1990s, under Bill Clinton, we had a couple years of balanced budgets. And that's just a distant memory now. Since then, we've been on this upward trend, a rapidly accelerating upward trend. The budget situation is the debt situation is much, much graver, no matter how you measure it, than it was, back in the 1980s. But back then people were worried about it. And because of their concern, we did have, this period of fiscal rectitude when a real effort was made to balance the budget, and it was achieved. And now it's just, it's so bad that actually the notion of balancing the budget just seems absurd, because we're just so far from doing it. We would have to raise taxes by just ungodly rates and, slash government to just a small fraction of what it is to achieve a real balanced budget. I mean, it's just, so people don't even talk about it. It's actually, that's the odd thing that strikes me, is that when we had, looking at it from today's perspective, a relatively sound fiscal situation, like back in the 80s and 90s, there was much more concern and real efforts were made. I mean, there were the Republicans actually in the 90s were, made that a central plank of their platform. And a Democratic president, Clinton, was exercised great fiscal restraint, achieved a balanced budget. Again, it just seems like, well, that's just a completely different era. It was not all that long ago. We're talking about 25 years ago.
Yeah, I even remember Clinton as a little kid.
Right.
But basically anybody born after the 90s has no idea about a balanced budget, never experienced, and they may never ever see it in this country again.
Yeah, and now that it's so much worse, you would think that the alarm bells would be ringing. And if, a few people reliably ring the alarm bells, like
Peter Schiff
or David Stockman. He's been right. He's been kind of shouting in the wilderness for a long time. But it's, again, now that it's really quite alarming, you just don't hear much. Nobody's paying attention to these guys. And I would say maybe there's kind of a Chicken Little dimension. And just say, okay, there was people said the sky was going to fall down, 30, 40 years ago, and it didn't. So let's stop listening to these people. They kept on warning us about this, and we just started, our debts just got bigger and bigger. Our deficits just kept on getting bigger and bigger. And hey, we're still here. So we don't have to worry, that they're just Chicken Littles.
We said the same thing in 2008 during the financial crisis. That was supposed to be the end. A lot of people were saying that this is going to be the collapse of the financial system.
Right.
It was a little scary for a while, but now it seems like a distant memory. So it seems like a lot of people, the position they take is just don't worry about it. Don't think about it. But maybe you should tell us why we should worry about it. Why should we worry about the debt? Is it really that big of a deal?
Well, I mean, historically, there are countries, an example is Greece. I think it achieved a debt of something like 140% of its GDP, and then and entered into a state of extreme crisis and had to be bailed out by the rest of Europe. And other countries, Argentina and so on, have experienced debt crises that can be very debilitating, very damaging, and are very difficult to get out of. Now the thing is, right, every country is different. We're, I think, at 120%. We're not too far from where Greece entered crisis. But we're the U.S. and maybe we can get away with it. Maybe we can go farther. Maybe because we have the reserve currency, we can behave in a very reckless manner. We can be extremely improvident, and spend to our heart's content, and somebody will always pick up the bill for us because it's a reserve currency and people need dollars. In other words, they'll buy these bonds, and that seems to be the assumption. And I think it's one reason why we've done so well so far.
Well, and then is that still happening, or is there still much demand for dollar reserves? Because I heard it's slipping, right?
Yeah, well, see, that's the thing is now that for a long time there were these bonds were basically zero yield. It's just like, which made it easy, very easy, dangerously easy, I would say, for us to get into debt, because we're getting money for free.
No interest on it.
Yeah, people, issue a bond, this is how, the dollars are created essentially. And somebody buys the bond. And yeah, we don't have to pay anything. We just get free money. But that is no longer true. Actually, there is a kind of a tightening up, a growing reluctance on the part of foreign lenders or foreign governments to buy U.S. debt.
Right. So really, there are I would say there's three actors that can be purchasing U.S. debt and lending money in the United States. We have domestic, people like me and you, corporations in the United States that are willing to buy U.S. Treasury bonds. You have foreign lenders, other nations and countries. That has been on a decline.
Right.
But then the third one, I think, is the most interesting one, which that is actually the Federal Reserve itself.
Right.
Right. And this is what's called debt monetization. And this is a relatively new phenomenon, right?
Yeah.
We started doing debt monetization the first time was during the financial crisis of 2008. Is that right?
Yeah.
We've never done it before, right?
Right.
And that was supposed to be a one-time thing.
Yeah.
Where they said we would do this just to, tide everything over from the financial crisis, shore up the banks, and then don't worry, we'll balance the budget, the balance sheet afterwards. We'll get these off of our books. But it didn't happen. And instead, what we're seeing, I think, increasingly, the debt that is being issued is we're issuing the debt to ourselves.
Yeah,
is that correct?
Yeah. As far as I can understand, it doesn't make a bit of sense to me, and I don't know. It seems like, it just seems like some kind of magic trick.
Right.
How can you base a real economy on this kind of thing?
Exactly. So, like, if anybody wants to borrow money, you usually have to go on the marketplace and see, like, okay, who is willing to give me money at what rate, and then I have to operate within that realm.
Right.
But if I'm able to just go to myself and be like, oh, I need more money. Hey, Charlie, you need money? Yeah, Charlie, I can give you some money. And that's kind of how it's working here in the United States, right?
Right.
Now, what are the dangers of that and the implications of something like this? Can we keep that going forever? What happens?
Yeah. Well, I think what happens is inflation. I mean, because essentially what you're doing is you're just creating money out of nothing.
Money,
right. And that's what we're seeing. I mean, what we had, according to government statistics, it was a couple of years ago, we had 9% inflation, and then what was it supposed to be last year? Again, it just seems to me a lot more. The things that I buy at the store, at the grocery store, they're just considerably more. Or at the hardware store or whatever. Everything seems to me like it's 50% or more than it was a few years ago. And yeah, so I think this is what you see. You can't get something for nothing. You can't actually pull a magic trick. If you're going to create a lot of dollars, but you haven't created a corresponding amount of, real things in the economy, those things are going to cost more. That's just simple math. And I think that's what's happening.
Right. Yeah, I feel like, I was in China from 2012 to 2022. And in those 10 years, I came back basically right when the Fed started tightening. But I was shocked how much prices increased here. I feel like everything tripled, housing especially.
Yeah.
In those 10, 12 years I was gone, I saw housing going up, but I remember the dollar menu. Now I feel like I go to Chick-fil-A, I'm dropping $15 just for myself.
Right. Yeah, it's hard to have a meal under $15 now at a restaurant. And it used to be, I mean, in the not very distant past, just a few years ago, you could easily get under $10.
So if we're still running these record high deficits and we're monetizing the debt, you're saying this is leading to inflation. Well, it seemed like the Fed was combating inflation, starting in 2022. They said, okay, inflation isn't transitory, start hiking rates aggressively.
Right.
And now it seems like inflation went down, but the latest numbers show a slight uptick. Do you think that as long as we're monetizing debt and injecting it, that inflation will still be a persistent problem? Like, are we looking at more inflation in the future if we're running these huge deficits and increasing our national debt by more and more?
Well, I think it's inevitable as long as, as we have a growing economy, until we go into a recession. That's the thing, is that if recessions tend to have a depressing effect on prices. Just people don't have as much, they don't spend as much, and so there's less price pressure. But in the meantime, but on the other hand, that if we do enter into a recession, the government will be, under pressure to stimulate the economy, by printing even more money. So it looks like, potentially anyway, that we've entered into a vicious cycle.
So how would you break this vicious cycle?
Oh, it's going to be painful. That's the thing. It's like if we had done it, like, say, back in 2008, it would have been painful then, but it's not nearly as painful. The longer, you put it off, the more you distort the economy. That's what you're doing. The more painful a realignment, a return to a kind of a real balanced economy is going to be. Because people get used to, or institutions get used to, the various economic arrangements that we have now. But when, if those, I would, everything suggests that those arrangements are way out of whack. And to bring them back into balance, is going to be painful. I mean, it's going to be the collapse of a lot of businesses. It's going to be a lot of belt tightening. It's not going to be popular, and that's why, governments are very, very reluctant to really impose any kind of fiscal discipline, because in the short term it's painful. In the long run, it's better for everybody to get over it. Take your bitter medicine and go forward. But everybody, everybody lives in the short run. Every president, every senator, is looking at the next election and doesn't want to be the guy that's responsible for the bad economy, that is going to inevitably take place if we do, administer that bitter medicine.
Right. So there's a clear incentive to continually kick the can down the road and make the problem larger and larger, and just hope this game of hot potato and it doesn't blow up when it's your turn, when you're in the incumbent and sitting in that big chair. So it seems like, I guess there are kind of three paths out, right? The one is you can cut government spending, which is very unpopular and something that seems like it can never get done. The other is to increase taxes drastically, and we would have to increase taxes by double what they are now if we're running the types of deficits that we are, which doesn't seem politically feasible. Which leaves the third option, which is print more and inflate the debt away. And historically speaking, has any country taken the more noble path of cutting spending or increasing taxes, fiscal responsibility, or is it always that the currency is debased, we always go through inflation, and it eventually destroys a country and an economy? Is that, to me, I'm trying to think about it historically, if it's happened. I feel like the inflation path is always taken.
Right. Well,
can you think of a country that said, all right, boys, let's tighten our belts. We're going to slash all these government programs. We're going to raise taxes. Vote for me.
Right. Well, one thing I was looking at, actually, the German economy, I mean, the Germans are famous for being very concerned, very allergic to high debt and to inflation in general.
Probably because of the Weimar.
Yeah, because of their experience. I mean, it was such a horrible experience that it's just that every German, here it is even generations later.
And you're talking about, this is after World War I.
Right.
After the Treaty of Versailles in the 1920s in Germany.
Right. When people had to take wheelbarrows of money to go buy a sack of potatoes or whatever, there are all kinds of stories. So the Germans have been very, very, very allergic, let's say, to inflation and to excessive deficits. And I was just looking, just comparing the German economy to the German budget to the U.S. and looking at the percentage of debt to GDP, debt as a proportion of GDP in Germany, as opposed to the U.S. And you can see actually there hasn't been, I think recently under Olaf Scholz, there seems to be some sort of loosening of the old discipline, but there just has not been this rapid, this accelerating increase. They have by and large kept it in check, but most countries have followed our path. Italy, France, the UK. Actually, I was just looking at the charts. They're very similar. So it just seems with the absence, if you don't have some sort of like a really sort of institutional culture that that takes these things, again, takes debt and inflation very seriously, that all the incentives are stacked, like you say, on the other side.
Well, even if it was sort of cultural, institutionalized, ingrained in the population to be fiscally responsible, it seems like eventually that will erode over time.
Right.
Because, we were more fiscally responsible in the past. And now it's a bipartisan thing, spending. Yeah. This isn't Democrats versus Republicans. Right. It's not like Trump is going to stop. Yeah, under Trump, the deficit ballooned. He started spending.
You can hardly see any difference. If you look at a chart, you don't know when a Democrat
and like you said,
the
last time that we balanced the budget was under Clinton, a Democrat. So, so this really is just institutionalized spending now. It doesn't matter who's in power. It looks like we're going to be spending. It doesn't look like we can stop spending. So what happens? Are we talking about potentially hyperinflation? Are we talking about a collapse of the financial system? Because we started experiencing this actually, at the end of 2022 or beginning of 2023, we had Silicon Valley Bank, and was it some like Standard Charter or the three banks that started to go insolvent.
Right.
And it looked like, these interest rate hikes are starting to really manifest themselves into the banking sector, and we can look at starting a collapse. But then the Fed came in, did a backstop, guaranteed all deposits, and tried to put a stop to it. But it seems like this is just kind of a little Band-Aid over a gaping wound. And are we going to see more problems start to manifest within the banking sector?
Well, I don't know. It seems like that clearly we've lost control of the situation. There's really no way out. That's why people don't even, again, politicians and just don't even talk about it. There used to be a way out. There used to be a way to balance the budget. There doesn't seem to be a way out right now. So we've just decided that we're going to just pretend like kind of plug our ears or cover our eyes.
Right.
We just or be like an ostrich that sticks its head in the sand and then just hope that it doesn't happen, at least on our watch, But I think inevitably there's going to be some kind of financial collapse, probably combined with very high inflation, maybe hyperinflation. Okay. Because again, we have inflation now. We're spending at this tremendous rate. We haven't even hit a recession yet, and
it seems like the Fed feels like it can't raise rates anymore. I mean, maybe you can talk a little bit about why raising interest rates is so dangerous and painful for the Federal Reserve.
Well, that's been like the typically the way of putting the brakes on an overheated economy and bringing inflation under control. Actually, it was done in Russia recently. Russia had still has significant inflation, and to bring that inflation under control, the central bank there raised the rate to 16%, a very, very high rate. And we have done nothing like that, which is a rate much higher than inflation. The last time something like that happened was in the early 1980s, again, under Fed Chairman Paul Volcker, who was Reagan's Fed chairman. We were experiencing very high inflation, double-digit inflation at the end of the Carter years, and he slammed on the brakes. It was very painful. It was a very sharp recession. A lot of people lost their jobs, but that was approximately 1982. But we came out of it, and and after that, inflation was tamed. For years and years and years. I think it's until just recently did we see some inflation figures that approximated what we saw at the end of the 1970s. But yeah, that was the medicine that was used. It's the thing is, it's painful. What it does when you raise interest rates high, it becomes more difficult, of course, for businesses to take out loans and to expand, and which is kind of again just puts brakes on economic growth. And so, yeah, again, we seem to have a Federal Reserve that just extremely afraid of putting us into recession, and the Federal Reserve itself is constantly under pressure of the administrations. Biden does not want to see a recession before November,
right?
Most definitely. He might just take the pressure off of them, and after November 5th.
So we can expect deficits to increase, debt to increase. Another thing that we have to take into consideration, and I think another reason why there's so much pushback against raising the interest rate further, is that the interest rate on our debt is now so high. I think it's now totaling over $1 trillion a year.
Well, I think it's $500 billion now.
Right. Okay, double check that, because I was hearing that it's approaching $1 trillion a year now. Because the thing is the debt rolls over.
Right.
So as it rolls over, it's rolling over in these higher rates. So last year, it started to go up, but we're starting to feel the effects increasingly more as more and more debts roll over at these higher rates.
So now it's become a major budget item. I mean, it's just something like 10% of federal expenditures.
Just to finance.
Yeah. So So that's just kind of that's just money that you're throwing into a hole. That's nothing that's contributing to anything really. You're just trying to maintain the debt, and then it's getting worse from year to year. And I guess the projection is that it will be well over $1 trillion, or something like $2 trillion in a decade from now. And at that point, it will be the number one item. I mean, that most of the money that the government spends, most of government spending is going to get just towards interest payments.
So how do you get out of that? Because countries like Argentina have been experiencing that for a long time.
Right.
I mean, and it took someone. I mean, now you have this guy Javier Milei, who is slashing everything and wanting to get rid of the central bank and cutting all the spending, doing some extreme shock therapy in Argentina. That's a bit controversial.
Right.
Is that what will happen here?
Yeah. I don't know what else can you do. I mean, really, it's just you get into it, becomes just kind of a mathematical impossibility to climb out of it. You just have, without taking extreme measures. It just it's something that feeds on itself. I mean, it's just like you more and more every year. You've got to spend more, and simply to keep afloat. It's just sort of like you're treading water. You got to tread faster and faster, and at some point, it just becomes impossible. And we're not too far from that. I mean,
well, maybe we can take a step back and talk about the inflation rate again, because inflation hit 9% in 2022, I believe. And now we're down to 3.5, 3.6, something like that.
Right. At least that's the official inflation rate.
The February numbers show that it's higher than expected, so it's creeping back up a bit. Right. But are we overreacting? How do we know that inflation that the Fed didn't win, and that we did somehow achieve a soft landing? Everybody was, a lot of people were expecting a crash.
Right.
We had an inverted yield curve, which almost always predicts a crash. We avoided it. Did the Fed pull off a miracle, or have we just kicked the can down the road, and will we see inflation continue to rise? And
I think, well, first of all, it's certainly, and I'm not the only one who thinks this. It's hard to believe the government figures, just as a consumer, a regular consumer that goes to, that spends a good part of his income on groceries and gasoline and so forth. It's hard to believe that it just went up 9% in 2022 and then 3% in this last year. The prices continue to rise. I don't know. This economy just does not make any sense to me. It's just like nothing. like you said, there were like the regular sort of warnings, things that, what the inverted yield curve is something that was supposed to, it has always indicated, an imminent recession. And this time it didn't. There's just something, this is a completely new economy. I guess an optimist would say that, well, it doesn't matter, like the old rules don't apply. I think they do, it's just like the laws of physics, you're going to come crashing down at some point. I don't think we can escape inflation, that I don't think that the Fed achieved a soft landing, but this is just,
so there might be right some more kind of trickery with the CPI.
Yeah,
I mean, people have said that if the way they calculated the CPI in the 1980s was very different than the way they calculate it now. I think one of the big things there's a lot of little tricks with the CPI, but one I think is they use something called homeowners equivalent rent, which instead of actually taking the actual price of real estate, they will ask people how much would you rent your house for, which usually lags behind. But yeah, I agree. So I think inflation is a bit higher, but if it starts to creep up more, if we start to see inflation go up to 7-8% again in this election year, what do you think the Fed will do? Do you think the Fed can raise interest rates more? And also, this doesn't make sense to me either. The Fed was trying to do quantitative tightening essentially by raising interest rates, taking dollars out of the economy. But at the same time, the U.S. government fiscal side is spending a ton of money. So aren't these two things?
Yeah,
they don't go together, right?
Right.
One is spending a ton of money, the other one's trying to stop the spending. Pull in.
Yeah,
we're doing quantitative easing and quantitative tightening at the same time.
Right.
So.
Yeah, no, it's just a really bizarre situation. Frankly, it just doesn't make a bit of sense to me. And again, the optimist will say, well, again, I've heard this many times, in fact, during past bubbles. It's just like the old rules don't apply. This bubble, is going to go on forever, and the bubble always pops. And I think this bubble's going to pop too.
So we're in a bubble right now, and this is would you say so?
Maybe I'm just an old cynic. That's I'm not. I don't claim to have some special knowledge here, but I've seen these bubbles. I've been through many of them, and I always the optimists are. Let's put it this way: they're always right for a while, and then but eventually the bubble, whatever it is, in a bubble, something is where you have something that's really kind of a good part of the economy has departed from reality. I mean, you just, and then eventually, things, the economy comes back in line with reality, and that's what we call a recession, really.
But what's different now is I feel like the bubbles I think it really started in 2008. When we have a bubble now, and when it starts to pop, we don't let it pop.
Right.
We start pumping more money into it. So
it's
the bubble just gets bigger and bigger.
Right.
So can we keep on doing it?
Right. Well, yeah, no, it's kind of like to extend the bubble metaphor, it's kind of like you keep on pumping air into the bubble and it just gets bigger and bigger and bigger. And I think the end result, the pop is going to be all the more painful and dramatic when it happens.
Or will it not pop? Will it just turn into hyperinflation?
Yeah, I guess
that's a popping.
Yeah, right. That's what it could be one way or the other. It could be both at the same time. We may find what they used to call stagflation. Maybe there will be a collapse. Combined with in economic activity combined with high inflation. I don't claim to know. It seems like quite clearly. It just you can't. I know, of course, it's a modern monetary theory, right? The idea that you can simply ignore deficits, and I can see why. Well, first of all, a lot of people have, especially politicians, have an incentive to believe in that. They say, "Great, we don't have to worry. We can just give goodies away." Every politician wants to believe that, and so they're. But you just have to stop and ask yourself, does this make sense? And it just doesn't. If it's true that deficits don't matter, then why do we collect any kind of taxes? Why don't we just right? Why don't we just print money and give it to everybody? And then you see, you just do this thought experiment, and you see that obviously you can't. There's at some point where, let's say the fiscal situation departs too far from reality, and you end up with Yeah, just an economy that's no longer anyway aligned with the reality is the economy that's not functioning, because economics is about, you know, it's
Right.
about resources and limits and
People making rational decisions
right,
with real
based on
price
right,
signals. Right.
exactly. I mean, that's why we say, for example, the Soviet Union collapsed in the end, you know, or why it was an it failed in economic terms, is because they never solved the problem of prices. You know, prices have to reflect reality for businesses and investors and so on to make, you know, rational decisions. And if you constantly are distorting, you know, the prices, you know, either the general price level, you know, which what happens at the macroeconomic level, or, you know, through excessive intervention in the economy, then again, you know, it's not possible to be a rational actor. You don't. The prices are no longer in line with reality, and yeah, you know, no longer will decisions be rational. Resources will be misallocated, and I'm sure they're being misallocated on a huge scale right now.
So would you say that our economy is no longer based in reality with this type of debt, that we have departed from this and now we're operating in
Yeah, well, certainly at the macroeconomic level, you know, I guess that's just the general price level. I guess it's the you know, well, one thing is like, you know, in the past, again, he's just looking at interest rates and whatever. This tells you something about the real value of money and how much, you know, money there is available, you know, for an investor, and, you know, where he should put his money. Should he put it in, you know, invest in this business, or should he just hang on to it, put it in gold? You know, that's. But at the current time, you know, but and this is what I think anybody who actually, you know, has money to invest now sees. There really is very little incentive to put your money into productive enterprises. I mean, it's things like real estate. You know, as we have this, I think when you have this distorted macroeconomy, you have all kinds of asset inflation.
right speculative assets.
Right. So it goes into cryptocurrency. It
Right.
goes into right. It goes into
The stock market,
the
real
stock market,
estate.
but stock market without really any regard for actual profits or anything.
Right,
You know,
yeah.
just says, okay, it's being pumped up by the, you know, we know the Federal Reserve's, you know, got their back. You know, so we'll put
Right.
it there. You know, again, a truly healthy economy would allow the stock market to fail from time to time, you know, and then people have a healthy sense of reality and they're more cautious, and they say,
Right.
make sure, okay, I didn't look closely enough at these businesses. I just invested in a bunch of, you know, losers.
Yeah,
And,
people don't look
right.
at price to earnings ratios
Yeah, that's what they
anymore.
used to. Exactly. Again, that just seems so old fashioned, but you
Yeah.
think about it, that's reality. And now people don't have to worry about reality. You know, just put it in the stock market in general, or, you know, or put it in crypto, or put it in real estate, or whatever asset is inflating, and then just, you know, and then just go for the ride. But that's, you know, that cannot really, that's not an engine for real wealth creation. You know, I mean, it's you know, people are making wealth, but it's not making the country more prosperous or more productive. That's really the thing. I mean, it used to be that the stock market was all about, you know, funneling investments to the most productive companies, and I think that mechanism is simply failed. It's no longer there, and so, you know, we just have just a big casino, and some people are making a lot of money, but you know, we have the country as a whole is not becoming more productive.
Right. Well, what is the choice for everyday citizens? It feels like you have to get involved in this casino, or be left behind.
Right. Yeah. Another thing is right. Exactly. I mean, it just used to be, again, you know, going back to like the '80s and certainly the '90s. You know, like most citizens put their money in the bank, and they got an interest, you know, payments from the bank that were at least at the rate of inflation, and generally higher than the rate of inflation. And because that money was used by banks to, you know, to make loans to productive, again,
Enterprises.
right, and that's what it was all about. That's how it worked. But now, you know, almost feel like a fool for leaving money in the bank, right? I mean, because that money is shrinking every year. The interest rate is an absurd 1% or something.
My Bank of America is 0.01%, I
Yeah,
think, something like
yeah,
that.
right. I mean, yeah, no, that's what it's been for. I think when like we first got here and we put our money in a rural bank, and it was a few percentage points. It was probably, just a percent higher than the rate of inflation back then. Maybe we got 4% and the rate of inflation was 2% or something like that. And but over time, the rate of inflation has climbed. It certainly has in the last few years, even by government measures, and the interest rates have just dropped to zero. They did that really after not too long after 2008. So your money is just shrinking. You put it there. So then what do you do? Okay, and then there's the stock market, and the stock market though is artificial. It's just being pumped up by I guess that has been a wise choice for a lot of investors. So you just put it, but with often there's the occasional dud that really does fail, but just by and large, the market as a whole, you can just index it. You get one of those index funds or whatever, and it's going to rise. Because they've basically the Fed has made a commitment to support the stock market, but that's not what the stock market's supposed to be about. The stock market again is supposed to reflect reality, not just the commitment of the Fed.
Right. Well, this causes another problem as well, right? Because this ends up causing more wealth condensation. People that have money to play around with are able to put it in the stock market, put it into cryptocurrencies, and see their net wealth multiply by 3, 4, 5,
Right.
10 times. Whereas the person that's having to work 2 part-time jobs to support their family doesn't have disposable income, their cost of living is going up. So
Right.
we will see. So if we go down this route, will we just see an increased disparity between
right.
the wealthy and the poor? Or,
Yeah, I think there's no doubt about it. I mean, this is one thing that I have trouble understanding is why so many progressives are refuse to question like the role of the Federal Reserve. They seem to think of it as I guess because they see free money and it's a source of money for their projects, but at the same time, I don't think enough of them understand how it does contribute to wealth concentration. There's no question about it. To asset inflation. And asset inflation is just, with very few exceptions, benefits, the top tier, the top 10%, and not, certainly not the working class. I mean, you look at, I think it's like the bottom 50% have very little in the way of wealth. If you don't have any wealth to begin with, then this asset inflation is not going to do you any good.
Right.
You're just working with income. It's just the people that have moved beyond that and have accumulated wealth. They can play the game and do very, very well, and so they tend to just
So
the gap just grows with every passing year.
okay. So what does this spell for the future? Societal strife? Are we looking at a dollar collapse? Or do you think things will kind of plug along at a 3 to 4% inflation, and we'll be able to keep this gravy train going for a little while and paper things over? Or I know it's really hard to predict
Right.
economic collapses,
Right.
but
it's a fool's errand. I mean, it's just.
But what would be, if anybody out there listening, what would you suggest for them? I would not give I know we're not qualified to give financial advice.
No, I certainly am not.
But what is the future, just your personal opinion, the future of the economy looks like it's in dire straits.
Yeah.
Right.
Right. Well, it's, again, perhaps I'm a natural pessimist. And so like I've been listening to people like David Stockman for probably 20 years or so on. And I think he's completely right. I mean, he's been the, Chicken Little who's been saying the sky is going to fall down. I think the sky eventually will fall down. But it's also been clear to me that, you never know when it will. It's all a question of timing. We'll say the pessimists and the realists have been right about every, let's say, bubble that I've seen over the the years. There was that one in 2000, I guess it was the dot-com bubble. Then we had the real estate bubble, just to give, and that popped in, 2008, 2009, that time. And there were the naysayers, people said, hey, this is the bubble, this isn't a real economy, this is going to pop. And then there were the optimists, who said, no, we're just on a whole new trajectory, it doesn't matter. And the thing is, those optimists, they made a lot of money.
Yeah, they always seem to
yeah,
win.
that's right. And a lot of the pessimists didn't, because they say, hey, this is not real, and they stayed out of it. But that's why I can't give financial advice. And because, quite often the pessimists, they are correct, and their analysis of the fundamentals is correct. This is not going to last, but they don't know. Nobody knows when the bubble will pop. So some of these guys make a lot of money, over the course of 4 or 5, 6 years, whatever it might be, and the smart ones just get out or diversify before the bubble pops, and they do very well. Now the pessimists in the end, they prove right, it was a bubble, but maybe they didn't make any money in that time. And I would kind of say, like, now it's just like we maybe have the mother of all bubbles. It's just like maybe this all along there's the really big bubble, the national debt and the dollar itself. And this is something, it's just on a much larger time frame. There's people who started, again, ringing the alarm bells back in the 1980s. And now that was a long time ago, right? So, like, if you try to get out of the dollar in the 1980s, you kind of look like a fool right now. But it's just like, it doesn't mean that Chicken Little is wrong. Eventually the sky will fall. But maybe we're looking at a 50-year time frame, rather than... with the smaller bubbles, it might be 5 or 10 years, but in the larger bubble of the dollar and just the overall debt to GDP ratio, that's just I think is just a larger time frame. But it's something that, again, the people who say that this is this fundamentally flawed, we're on a path, a trajectory that cannot be sustained. They're right. The question is when, and it just. I don't claim to know when. Maybe we'll go another 20 years somehow. Maybe there's just more reserves of strength in the U.S. economy that I'm aware of. But it certainly seems like, there's some very alarming signals. It's just like the accelerating increase in debt, is something that just we haven't seen before. And yeah, it's just the deficits we have at a level that are just way beyond. I mean, it's not like, it's getting worse or beginning to add up. It's kind of like we're going down a slope, and instead of putting on the brakes, we're hitting the accelerator. And I don't think we can ever really say that in the past. The debt itself, again, as a percentage of GDP, is the highest it's been since, I think, 1945. In 1945, there was a reason for it, right? There was World War II, and there's no reason for this kind of debt right now. I mean, there's no legitimate reason for it. I mean, it's just bad fiscal policy. It's the only way you can explain it. Now we, put ourselves in a real fix, and again, I'm not going to make any predictions as to when it'll all come crashing down, but I think it will. I mean, it just doesn't. In the end, it just doesn't add up. You can't keep on spending, without any effort to, bring spending in line with economic fundamentals and not pay the price. At some point, we will in a big way, because the longer you put it off, the higher the cost will be in the end.
Okay. So what I'm hearing is buy a bunch of canned goods, get your ham radio, and get a bunch of guns and ammo, and get ready. And that's what I'm hearing. Okay, I think that's a good place to end it. Okay, thanks a lot, Dad.
Okay.